Cipher Mining stock exploded higher on Monday, surging nearly 20% in a single session to continue what has become one of the most remarkable rallies of the year. The stock's climb pushed it firmly into new highs, extending a powerful uptrend that's now captured the attention of retail traders, analysts, and increasingly, institutional investors. So what's really going on with CIFR? Why did the stock surge so dramatically today, and what does this mean for the week ahead? Let's break down Monday's breakout, the signals behind it, and why this move could mark the start of an even larger institutional rotation into Cipher Mining stock. After several weeks of strong gains, CIFR entered this week already showing significant strength. The stock had consolidated after its earlier highs near $18, absorbed the profit-taking and macro pressure from last Friday, and came into Monday with a clean setup. Then, buyers stepped in aggressively, driving the stock up nearly 20% intraday, on heavy volume, and holding that momentum into the close. This kind of surge isn't random, it reflects multiple forces aligning at once. The first and most obvious driver is technical momentum. Cipher broke cleanly through previous resistance levels, sparking a wave of stop-ins from momentum traders and algorithmic systems that chase breakout confirmation. These automated flows amplify moves, especially in stocks that have been trending strongly. Once CIFR cleared that ceiling, the path higher opened up, and volume followed. The second factor is institutional attention. Cipher's rating upgrades and visibility in performance-based metrics have not gone unnoticed. Investors Business Daily recently raised Cipher's composite rating to 96, placing it ahead of nearly all other publicly traded stocks in terms of technical and fundamental strength. That might sound like a small footnote, but for many funds and trading algorithms, these rankings are powerful by signals. When a stock climbs into the top percentile of strength, institutional money starts flowing toward it. Monday's price action may well reflect the early stages of that shift. The third factor is narrative momentum, and Cipher has one of the strongest stories in the market right now. It's no longer being valued solely as a Bitcoin miner. It's being seen as an emerging player in the high-performance computing and AI hosting space, a dual industry position that has enormous potential. The company's partnership with Google and FluidStack, a 10-year $3 billion hosting agreement with a $1.4 billion lease backstop, represents both validation and funding security. Google also holds around a 5.4% stake through warrants, which further aligns incentives. That partnership effectively transformed Cipher from a cyclical miner into a future-proofed infrastructure company. The market is catching up to that shift, and today's rally reflects that recognition. At the same time, Cipher continues to deliver operational consistency. In its September update, the company reported mining 251 Bitcoin, with 19 coming from joint venture sites and an additional 7 Bitcoin equivalent generated through power sales. It sold 158 Bitcoin during the month and still held around 1,500 Bitcoin in its treasury. That's not just a sign of production strength, it's evidence of liquidity and balance sheet flexibility. Cipher's self-mining capacity now sits at 23.6 exahash per second, supported by 114,000 deployed miners operating at an efficiency of 16.8 joules per terahash, placing it among the most efficient operators in the entire industry. Phase 1 of the Black Pearl facility is now complete, adding over 10 exahash of capacity, while Barber Lake continues to advance as the cornerstone for Cipher's AI and HPC hosting expansion. Those fundamentals matter, because when a company delivers operational performance and technological evolution at the same time, institutions start to take note. They're not just buying a Bitcoin miner anymore, they're buying infrastructure that's positioned to serve both the blockchain and AI economies simultaneously. That's a rare positioning, and it's exactly what makes Cipher's current rally so compelling. Now, while today's move was explosive, it wasn't chaotic. The volume profile and intraday behavior showed strong, sustained buying, not a wild pump. That kind of controlled momentum is what you see when larger players are involved. There's no frenzy, just consistent accumulation through the day. The fact that the stock closed near its highs is another bullish signal. It shows confidence rather than exhaustion. Another contributing factor could be short covering. Cipher has been one of the more heavily shorted names in the AI crypto crossover space, and a 20% breakout forces those short positions to cover. When shorts are squeezed, their buying adds fuel to the rally, creating exactly the kind of price acceleration we saw today. From a technical perspective, this breakout is significant. The stock had been consolidating above key support levels around $16.5 to $17. Today's move blasted through resistance near 18, turning that former ceiling into potential new support. The next zone to watch is around $20, a psychological level that could act as a short-term target for traders. If Cipher holds above 18 in the coming sessions, it could set the stage for another push higher, possibly into the low 20s. Beyond the charts, sentiment around Cipher has shifted dramatically over the past few weeks. Earlier this year, the company was still seen by many as a speculative crypto play. Now, it's being mentioned in the same conversations as AI infrastructure providers and energy-efficient compute platforms. That's a major re-rating of perception, and perception drives price. What we're likely witnessing now is a repricing event, where the market begins to value Cipher based on its future potential rather than its past categorization. Institutional investors who previously ignored it as just another miner are realizing it's building a foundational role in the infrastructure that supports both digital assets and AI computation. Of course, it's important to remember that no stock moves straight up. Even strong trends experience pauses and pullbacks. But the structure of Cipher's rally so far suggests that the underlying buying pressure is steady and well distributed. The retracements have been shallow, the volume has been healthy, and each breakout has built on higher levels of support. That's the hallmark of a sustained institutional trend rather than short-term speculation. Heading into the rest of the week, there are several things to watch. First, whether Cipher can hold these breakout levels. Sustaining price above $18 will confirm that this wasn't just a one-day spike but the beginning of a new range. Second, watch for volume continuation. If volume remains strong even on small pullbacks, it indicates that dip buyers are stepping in, another bullish sign. Third, keep an eye out for any new coverage or institutional disclosures. If funds begin to report increased positions, it will validate what today's action hinted at, that institutional participation is rising. Finally, Bitcoin and macro conditions will continue to influence sentiment, but what's becoming clear is that Cipher is starting to decouple from day-to-day Bitcoin volatility. It's moving on its own fundamentals and its growing reputation as a dual-sector infrastructure company. This is exactly the kind of market behavior you see when a small-cap stock begins to graduate into institutional territory. The story matures, liquidity deepens, and perception shifts from speculative to strategic. In short, Monday's 20% surge may not just be a random spike, it could be a signal that Cipher Mining's next phase of growth is now being recognized by the broader market. The fundamentals support it, the partnerships validate it, and the technicals confirm it. If Cipher holds these levels and builds on them, we could be looking at the early stages of a sustained re-rating, one where the market starts to price in its AI and HPC potential in a much more serious way. That's not hype. That's the natural evolution of a company that's proving it can execute across multiple high-growth verticals. So as we head deeper into the week, all eyes will be on whether Cipher can maintain this breakout momentum. If it does, the next stop might not just be $20, it could be a new chapter for one of the most promising AI infrastructure stories in the entire market.